Forms to be delivered by a distinguished fellow, a council member, and a professor of accounting, Professor Godwin Oyedokun. I want to believe that the Nigerian tax reforms essentially aim to enhance revenue mobilization, improve tax compliance, and promote economic growth. These reforms have significant implications for individuals and organizations, impacting personal financial planning, business operations, and overall sustainability. For individuals, the reform brings changes in tax rates, allowances, and compliance requirements. Some of the key considerations are understanding updated tax brackets and rates, optimizing tax deductions and reliefs, ensuring compliance with filing and payment obligations, planning for potential tax liabilities. For organizations, the reforms impact various aspects of business operations, which include, but not limited to, the following: cash flow management, that is, changes in tax rates and compliance costs, which may affect cash flow projections. 2, operational costs, that is, businesses must adapt to new tax incentives, exemptions, or increased tax burdens. 3, strategic decision-making, that is, tax implications influence investment decisions, expansion plans, and restructuring. So to achieve sustainability, therefore, individuals and organizations must: 1, stay informed about tax laws, updates, and changes. Optimize tax planning strategies to minimize liabilities. Invest in robust tax compliance and reporting systems. Explore tax incentives for growth, innovation, and sustainability initiatives. Therefore, the reform presents opportunities for economic resilience and growth. By understanding and leveraging these changes, Nigerians can enhance personal and organizational sustainability, contributing to the country's economic development. Also, there are some potential strategies that we can use to navigate the reforms, and this will include: 1, engaging tax professionals for expert guidance. I hope this particular expose will also enrich our understanding of the subject matter. 2, investing in tax technology solutions. 3, building tax risk management frameworks. And 4, exploring tax incentives for sustainable business practices. Distinguished ladies and gentlemen, as we navigate these changes with this highly researched expose to be delivered by the erudite Professor Godwin Oyedokun, collaboration and adaptability will be key to unlocking the benefits of the Nigeria tax reforms. I want to thank you for listening. God bless you.
Thank you very much, our President, for that welcome address. We really appreciate you. I would like to mention, please, that those on Zoom should ensure that if they are still moving around or they're not settled for this webinar, they should please turn off their cameras because the the images are distracting. Please turn off your camera if you are not settled to listen to this presentation so that it would stop distracting the audience. Thank you very much. Now, I would like to get into the presentation proper, and to do that, I would like to introduce our speaker for today, Professor Godwin E. Oyedokun, FPDCR. He's a distinguished legal scholar and professor of accounting and financial development at Leeds City University. He brings a rare blend of academic depth and practical insight into taxation, finance, policy analysis, making him exceptionally well positioned to guide us through the realities of Nigeria's evolving tax landscape. He's a distinguished scholar practitioner with over 25 years of multidisciplinary experience in accounting, law, forensic accounting, taxation, financial development, law teacher, and public policy analysis. Currently, he's a legal scholar and professor of accounting and financial development at Leeds City University, Ibadan. He's widely respected for his contributions to academia and industry. For those of you who know Professor Oyedokun, if we are going to read his citation, all of the things that he has done, we will be here for hours. And so for that reason, I'd like to just welcome Professor Oyedokun to this event. We know that the Institute has brought to the fore today somebody who is very, very skilled, somebody who is very, very proficient, and we're going to really enjoy the presentation that he will give us today. So ladies and gentlemen, please join me in welcoming to the mic and to deliver this presentation, Professor Godwin Emmanuel Oyedokun. Please use your emojis to welcome him to the meeting. Welcome him, please.
Thank you so much, Madam Deborah, for the introduction. On the high table, we have the president of our institution, Dr. Wolabi. Thank you for bringing us together for this today. The registrar is also seated, as acknowledged previously, Professor Ebuzo Lambert. Thank you for putting us together all the time for this. Distinguished members of our institutes and all other visitors on this webinar today, we want to say welcome, and it promises to be very entertaining. Directing the ICT unit to please help us with the projection of the PowerPoint while we kickstart this. Can we have the PowerPoints on? So while that is being done, I want to let us know that today we will be discussing the Nigerian tax reforms, especially what you want to hear, the one you don't want to hear, and how I feel about it. Then how will this impact your business? And if you don't have business, how will it impact you personally? Of course, the issue of this particular reform has been there since when I know my name to be Godwin. However, because of advocacy of some people within the tax and accounting environment and law, governments decided to start what we call piecemeal reform. And I call it piecemeal for accountants in the house. They understand that when you want to acquire a company, there's something we call piecemeal acquisition. You'll be acquiring the company bit by bit until you gain total control. So this is what tax reform has been. We witnessed a 30 years run around or turnaround in 2019 when the then president accompanied the country's annual estimate, which we call budget, to National Assembly with what we call Finance Act 2019. And we noted that that particular Finance Act happened to be the resurgence of same, because the last time it happened, before that 2019, happened to be around 30 years before that time. So you understand what we witnessed during that period of time, and it was as a result of that kind of agitation, advocacy, that a useful tax law shouldn't just be too old, to the extent that most of the factors and underlying philosophy must have been referred to as stale, just because of passage of time, changing technologies, and nature of people. So we noticed that 2019, some surgical operation was done to some principal acts. And when I say principal acts, I mean those acts that has tax provisions, okay? And those areas in which we wanted change, that particular 2019 reform, which came in form of surgical operation to those principal acts of various acts, including those acts that are not called tax acts, okay, like revenue mobilization and others. Fiscal responsibility act was also touched during that period, and we cumulatively call all of them tax provision. Therefore, during that period, we noticed that even in the surgical operation or surgery room also witnessed a kind of some of the mistake that could happen in real life, whereby some people forgot scissors in the body of their patient. And that was why 2020, 23, 22 Finance Act also amended previously amended 2019 Act. And that is why we see what happened to Personal Income Tax Act, which has its amendment act of 2011 being surgically operated on in 2019, 2020, and up to the time in which we were fed up of Finance Act. Fast forward to this period. But before this period, we also noticed some operation on the tax law that has to do with company income tax. Okay, CITA. 2007, it was operated individually as amendment. But during this 2019, 2020, 2023, a lot of advocacy went into it, and the nature of companies in Nigeria were, can I say, graduated into like three. We have small, we have medium, and we have what we call large company. And what brought that about is actually what we refer to as the mind of national tax policy, with respect to the fact that government was saying it is good to move away from what we call direct taxes to indirect taxes. The accountants and finance guru in the house, we understand what I mean by moving away from direct taxes to indirect taxes. Okay, you notice what happened with River State, stamp duty, VAT, in which Lagos and some other states actually joined that litigation with respect to who actually has local standing in assessing and collecting VAT. So if you look at that issue within the scope of my introduction to this webinar, you will notice that Finance Act, the latest one, I think 2023, laid that to rest, that who should actually be in charge of VAT. Because of that, all these nuances of small or piecemeal legislation that we have that were being used to, especially the ease of doing business, what happened is that all were now put together in this current reform that we have, which cumulates into what we have in 2025, whereby June witnessed the signing of new set of tax acts in Nigeria. Now, the committee was set up as led by one of our own, Mr. Taiwo Yedele, who has also been in forefront of advocacy of rejigging our tax law in Nigeria. Now, you agree with me if you look at the number of tax law we had up until December 31st, 2025, you will even use your finger and you will count more than 10, 15 of those tax acts. However, there are some laws in Nigeria that are not Christian tax acts, but have provision that has to do with tax. Those are also supposed to be read in conjunction with those tax acts. So with all this, it presupposes that before you can successfully navigate the tax environment, tax system, you must know on your fingertips all the tax laws in Nigeria. So that may also impede and drag the ease of doing business as one of the mantra of the government. Now, that aside, what now happened? The reform in context is actually with respect to the fact that Nigeria was looking at it that there should be a tax landscape which will ensure that government has enough revenue to prosecute its business. Don't forget, government doesn't have any business in doing business, but the business of ensuring the citizens are okay. That's the only business government should be involved in. However, if government is not critical about its own business of ensuring that the citizens are okay, then there won't be anything called enabling environment for business to thrive. If businesses won't thrive, individual will also not live that particular life that is meaningful because of the concept of taxing to death. Taxing to death in terms of principle and concept is coming as a result of the situation where the previous tax law even ensured that even when you are not making profit, provisions were included in those previous laws that made you as business or individual to even pay tax when you are not making profit, because government still feel that you are not telling the whole truth but the truth of the matter. So the key area for this reform, if you will allow me to affect your mind, is actually an issue of digitalization and the meaning that we want to broaden the tax base. Again, what we also notice and what we have achieved with this new tax law is what we call harmonization of various tax law that we have, and they have been harmonized and they now look like chapters in a single book, whereby you have a book called tax law. Then each of the previously existed tax law now form what we call chapter in same. Again, we also realize this is for researchers and those that want to advise government. You need this knowledge of what I'm explaining now to let them know that formalization of informal sector can be ensured with this new tax law. It doesn't matter if everyone in the audience agree that this is coming to even aid our way of doing things. But the truth of the matter is that formalization happened. And what's the meaning of formalization? The likes of Adejobi that has a side hustle is not a formalized business. Okay, if you have a direct shop that you go to after your work, if you have kuli and gari that you are selling aside what you do, those are not formal organizations. And as the law we have it, they operate under informal sector. So if they are informal sector, they are green sector. If they are green sector, they are underground economy, because those operating in such economy are not counted. And most often than not, they are not captured in financial shenanigans of the country. So to say that it's going to be too difficult for Nigeria to account for what they do. So by the time the tax law is moralized and double taxation is eliminated, multiple taxes is no longer there, what happens is that most of these mushroom companies, apology for calling such companies mushroom, but what I mean by that is that those small nano businesses will now do well, make more money, and as they are making money, you know Nigeria for sure. that by the time they make more money, it will reflect in the kind of dress they wear, it will reflect in the kind of food they, so it has multiplier effect, and at the end of the day, the business will improve. By the time the business is improving, the business will grow to a formalization that is formally existing, and it can be captured in what we refer to as committee of companies in the country. So if you look at the positive outcome and the structural challenges that we have, that's why this lecture is tagged for you to see what is good in it, what is bad in it, and if there's anything called ugly aspect of it, it will be lexically looked into, and can confirm and conclude that this reform carry profound implication for individuals that are existing in this country or organization, because it helps them to reshape how they keep their finances in terms of management and planning. It also helps them in terms of their compliance activities. Okay. Now, understanding this law means that constitutionally you cannot take government to court because of the fact that they are collecting taxes. Okay, so I want to let you see how you can understand taxation in Nigeria. Whether you like it or yes, constitutionally, if you look at section 24, subsection F of Nigerian Constitution, it's specifically mentioned that all citizens, and then when you say citizen, we talk about taxpayers. Taxpayer could either be individual or corporate organization. So he's saying individual taxpayer, corporate taxpayer must declare their profit, income, truthfully to the lawful authority. Okay? So, if you also look at section 44, subsection 2 of Nigeria, it establishes that taxation does not infringe on citizen properties rights and proprietary rights and all this. And we have current challenges in the framework we have. And then these have been put into the criticism that we have. So this reform initiative, as I've said before, saw us through the landscape that we have. So succinctly, you will now see that before we can navigate this evolving tax arena, what you will see is that tax base will be broadened. So for the set of people that fear that this Tinubu and his taxes, of course, let me declare that I am not working for government. I have not worked for government before. I am just a professor in a university, okay, and I'm a practitioner. I do not gain or get money from government to come and explain this to you, okay, but the institute is inviting us to educate us. So just know that what I'm saying is, as a professional, that before, some people are supposed to be paying taxes and they were not paying. So this reform make them to be part of those that will be paying taxes. So we cannot say government is increasing tax rates. No. It's also help us to improve compliance initiative, because before, if you have a company and everything is shrouded in secrecy, you will not know at what point you are entering into a terrain that will not make you comply with tax law. And at the end of the day, if you don't comply, it's not even the fact that you are not paying taxes. It's because you are not filing your return as and when necessary, and that has implication, which the financial burden of same could even be more than the amount you will have paid if you have been complying in a manner that is expected. It also enhances revenue generation and efficiency of government, because government will now have more money in order to prosecute the business of government in governance. And we have, I want to make this example so that you can appreciate government. You can say government is not good. One day, you yourself or your family will find yourself in the corridor of power, and you need to know, how do you do this? Is that if you look at your room, the number of windows, the number of doors that enter your room will be the number of risk avenue that can impede or that can impact negatively your room. If you look at where we have concrete, like block, cement, definitely when intruders are coming, you will know that they are not coming through those areas. They can either come through windows, which you use ordinary louver blade or casing and the likes, or the door can be broken and they can enter. Therefore, blocking the loopholes into which government have its revenue drained, siphon, is one of those things that this tax law has achieved for us, and it has also helped us in reducing or increasing the efficiency that we have in it. Now, if you look at piecemeal of this tax law that we have 4. And again, if you look at the 4, I will be explaining them as I get to that. You will know that in the tax system, it is tried to law that 3 factors are important. Number 1, tax policy, tax law, and tax administration. Within the tax reform that we've witnessed 2025, you will see that it's border about tax law, tax laws, and tax administration. Therefore, we have NTAA, that is Nigerian Tax Administration Act. We now have NTA, Nigerian Tax Act. Then you have the one that combine all of them together, which is Joint Revenue Board. And we now have the overall establishment of tax revenue or tax administrator in Nigeria, which is previously known as FRS, which has been changed to Nigerian Revenue Service. So, like I said the other time, the background to NTA, which is not National Television Authority, but Nigerian Tax Act, is that it caters for all previously known tax laws, like Company Income Tax Act, Personal Income Tax Act, Petroleum Profit Tax Act, Capital Gain Tax, all sort of, including taxes and levy approved lists for collection that combine local governments and states together. You will see that they've now been harmonized and packaged in Nigerian Tax Act. Okay? What is doing for you is that if you want to do your business and you want to know about tax as it relates to you, all you need to do is to just take that Nigerian Tax Act that look like this, open the chapters, and you will see each of the previously known tax law, which naturally you will have been searching piecemeal. And then even when they were amended, the amendment and the principal heart may not be the same way. You will still be reading no provision if you are not in this business of tax professional that some of us are. So the pillars of this reform now, removing tax policy, because tax policy has been effectively dealt with as predecessor of 2017 Nigerian tax policy, national tax policy, and that of 2017. And that is the basis upon which we are now where we are today. So this current reform, which we were told is just one of the reform initiatives of Mr. President, is just to deliver these 4 acts and implement same so that we can have a country of our own, irrespective of political angle in which people are throwing to it. So Nigerian Tax Administration Act is NTAA, and is the one that streamlines the compliance effort, how you file your return, especially electronic reform, what happened to dispute resolution, if there will be audits and investigation, then issue of standard within the taxation is resting there. Now, the next one is Nigerian Revenue Service Establishment Act. Okay? This one actually creates a new federal tax authority that has new clearly defined roles and with its strong autonomy to stand on its own, and it can be more accountable. And let's discuss this. You are a father or you are a mother in your house, you have 5 children. And you now say all the children can go out there and generate revenue for the family. Once they generate this revenue, they are bringing it to the table of the family head. So if it is put on the table of the family head, and the father or the mother, whoever is leading the house, is now saying, okay, in order not to distract other children from their core business, let us have one of the children handling the revenue of our house. Okay, every other person fall back to your core activities and ensure you deliver those services as is expected. Now, why will other children want to fight that they want to be generating, collecting revenue, if it is not that they are palemoying? That is Yoruba meaning of you trying to hide family money under your own pocket. So what we are trying to say is that this Nigerian Revenue Service has been authorized to now superintend, coordinate, be in charge of all revenue generating agencies in Nigeria without usurping their own responsibility as we may think about it. Therefore, if you are a custom body, please custom well, and the generation of revenue should be for Nigerian Revenue Service. If you are a police force, please don't generate revenue only for you to collect. Let the Nigerian Revenue Service collect. You just police well. Ditto for every other agency of government. That's what the Act is known for, and it's especially repeal the Federal Land Revenue Establishment Act 2007 to pave way for Nigerian Revenue Service Establishment Act 2025. And then autonomy is sure. The last of the generation of this reform that we have is Joint Revenue Service, now Establishment Act, for tax professionals, tax educators, lawyers in the house. You will notice that activities of the predecessor of Joint Revenue Service is under Nigerian JTB. And you know that JTB is known to law under personal income tax, which is now on its own, just like Federal Land Revenue activities was under personal income tax before the Establishment Act 2007. The same thing is now happening to Joint Revenue Service. This is necessary because you must understand the tax system in the country in which you want to do your business or in which you want to thrive. So we now have harmonized federal, state, and local government role here so that there will not be duplication in the activities of Federal Land Revenue, which we used to know, and the state and the local government. They now have a joint that look like joint tax board, but it's now called Joint Revenue Service. So this reform, of course, collectively address multi-layer taxation, which has now consolidated legal framework and expand tax base. Now, I want to pick this one after the other within the space of time that I have. The objective, of course, globally is streamlining tax system, ensuring tax harmonization. If we have anything called nuances of taxes, it eliminates it. Then we now create a pathway for digitalization and economy that is characterized with digital, which were not previously included in the previous tax law. Now, the Nigerian Tax Administration Act has taxpayer registration, which now makes you to now have a responsibility to government that if you run a business in the country, please, I am not saying you should go and register your company. If your company is registered, it will either be registered as a business name or corporate organization for the kind of audience that I have. If you don't have any of these two, then you are 100% working for someone or working for an organization. If you are working for someone or you have your personal business that are not registered under corporation, then you are known to have been under personal income tax. I will not make mistake of calling it Personal Income Tax Act because Personal Income Tax Act is no longer known to law. It is now Personal Income Tax under Nigerian Tax Act 2025. So if you are working for someone, then the organization is already charging you tax based on the requirement of the law, and it is referred to as payee. That is pay as you earn. So if you are part of this audience and you work, you collect salary, it is expected that if you negotiated that you are collecting 100,000 per month, your take home can never be up to 100,000. If your take home is now up to 100,000, note that the organization is not charging you tax on behalf of government. And like my Igbo people say, Odipa risky. So Odipa risky within this concept means that in future, if you need something from government, it may be difficult for you to challenge that status quo because you are not responsible to government. And if you need something like tax clearance in order to buttress your point, you want to do all those things that the law says tax clearance must be provided, you will not be able to do so. So if you are working, you are supposed to pay payee. Ask the organization to give you statement that shows what you earn, what they have deducted, what they have added, and what gets to your bank. And if in Nigeria today you are still collecting your salary by cash, it means you are not actually working. You are only doing that job that I don't want to mention. Now, it's still personal income tax. Now, if you have your business, like say Dr. Adeyeye has a shop where they sell agricultural product because it's allowed under law for you to do that, and you register your company under business name, you do not have any problem. All it is expected that from January to December, calculate all the inflow, which we call income. Write it down. That is not your profit. Again, write all the expenditure profile of your business, and you, if you are the one managing the business. But if you are not managing the business because you are working somewhere else, whoever is helping you to manage business, write all the expenses on the other hand. Let us see, is expenditure of this business 10,000 naira? If answer is yes, write them down. What is the income? Income is 15,000 naira. Okay? For the purpose of this, please, accounting and finance guru in the house, please just allow us this explanation for our colleagues who are not part of us. Okay? So, it means your income for that business is 15,000. Your expenditure is 10,000. We can see that when you remove one from the other, positively you have 5,000 naira that we can call in the Yoruba English gain. 5,000. This 5,000 is what government is interested in. Please do not allow TikToker, Facebook people, and all this online tax emergency guru to deceive you. When government tax, it does not affect your cost of business again, because tax is as a result of your profitability, not as part of what you are coming. And if some guru may want to take me up on issue of VAT, I will also tell them, because I don't want to use their explanation to destroy the flow of this, that even VAT you are talking about, if you plan your life very well, that's what we call set off. Let's leave that. So it is this 5,000 naira that the individual that are doing personal business, we do what? We now declare, and they will now check tax law band with personal income tax and know what they will pay. Now, let me solve their problem almost immediately. According to the tax law that we now have, they are saying if this total income within that year is not up to 800,000, and I had to hit 1.2 million, you have business, you have no business in paying any tax, because it is not your portion to pay tax. However, Godwin, is this tax law better than what we were operating as at 34 December 2035? I will say yes with us my chest. Why? Because the law says before that even when you are not making profit, there's something we call minimum tax, that whatever the income you generate within that period under review, 1% of it, pay it as a tax, because you are not making sense with your profitability. So also corporate organization. But this law is saying even when you make money up to 800,000, and I'm also now saying even up to 1.2 million, you still do not have anything to pay. But is that going to affect the likes of Dr. Wolabi and Professor Iyebuzo? No, because they are bigger. And the purpose of this law is not for people that are rich, that have 3, 4, 5 cars and houses like them. Because the important part of the tax is some people don't have money. Let us also allow them to breed, so that they will not continue to constitute nuisance to the economy. So don't come and challenge this government by saying, you have money now, you have houses. Some don't have. We need to take care of them. So it is responsible. And the person that gave us this principle is not of this generation, Adam Smith, 17 something. Okay? And it is like that. Now, I've been able to resolve activities of personal income tax, but note that even if you are if you have 3, 4, 5 houses, and your salary is still not up to 20 million per annum, it's not up to like 18 million per annum, you are still not affected negatively. You will see it in my subsequent slide. Okay, so all these are there, and then Structure and the likes are left. Now, if you look at structure and funding of Nigerian Revenue Service, it is practically none of our business as individual here, because no matter how they operate them, so let them just operate and make sure the life is very calm for us. So on that, we should know that the structure now have executive vice chairman, which is subject to Senate confirmation. Please, those that are interested in this information may want to dig further. They have expanded responsibility, and they now have their management fee reduced from 4% to 2%, just like we witnessed in Order 9 that was just signed within the last few days, that says NNPCL should directly remit government money. So this is there. Now, Joint Revenue Board that I talk about, it will be the one to organize all other tiers of government, and it seeks to establish 3 key institutions like Tax Appeal Tribunal, Joint Revenue Board, and Office of Tax Ombudsman. And let me quickly explain the Office of Tax Ombudsman. This one is saying that, unlike before, when you have issue with your assessment. Now, what is assessment for my people that are doing business that join us? Okay, assessment means that government is saying this is what you should pay as tax this period. And you look at it and you feel that it is not right. You have rights under law to claim your rights under the law. So what do I mean? You need to engage tax professional, then within the stipulated time allotted, write to the agency of government that is asking you for this, if it is state, if it is federal, and the likes, and reject the assessment they gave you to pay social tax with your explanation. If they look at it and they say, okay, let us amend, you are right, good for you, you go and pay. But if they say, oh, we have amended some, this is not correct, blah, 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 and they send to you, and you agree, you go and pay, no problem. But if you object to their final assessment, then you write to them, and they now write to you that they are giving you notice that they are not amending further. That is, this is what they want you to pay. They call it NORA. Okay? What is the full meaning of NORA? Notice of what? That they are not amending it further, and then that is your final thing that you should pay. You have rights to go and appeal. And that's why we said this act actually now make it more better for you to have Tax Appeal Tribunal. So Tax Appeal Tribunal is saying within so period of time, come and approach Tax Appeal Tribunal, because you already have notice from the tax authority that they are refusing to amend, and that's why we call it notice of a refusal to amend that particular assessment that you are charging. You can go to appeal just like a court, and then whatever the Tax Appeal Tribunal rule is your final assessment. Okay, however, that is more adversarial in nature. You may wish to go to the option of tax ombuds, which is saying government has created a particular office for you, which government actually supervise and finance, and they serve as your arbiter. They help you to look at your tax affairs, and they do all this service for free. These are the innovation we have in our new tax law, which was not there before, but it operates in other claims. So, of course, policy, context, and strategic goal of the reform is what I've told us. Now, let's look at some key provisions, like CITA amendment. I did not make mistake by calling it CITA. It is CIT now, but the amendment was CITA. So we now have new income threshold for business. For those of you that are now saying, okay, your company is not part of the business name, then you are to be administered or charged to tax under company income tax. Okay, which means you are a corporation. It is Federal Land Revenue that is, which is now Nigerian Revenue Service that is in charge of such taxes. So the government is now saying, don't worry, we notice that you don't have much money. This business is not too booming. If your turnover within a year under review is less than 100 million or equal to 100 million, don't pay tax. And I want to ask you, the predecessor of this law does not have such provision. In fact, the predecessor of the predecessor of the predecessor of that law really has 30% of whatever you make as profit to be paid to the government. But during the Tax Finance Act that I mentioned the other time, government graduated companies to three: small, medium, and large. And they say small company don't pay tax, 0. Medium company pay 25%, then large company continue to pay 30%. But in this new act, the structure has been dismantled, and we now have 2 layers of companies in Nigeria. And look at it. You will see that you and I that are here today will rather fall under one of the 2. And let's see how it affects you. They're saying if your total income, I'm not saying profit, is equal or less than 100 million, you will not pay tax because your tax is 0 rate. There's a difference between 0 rated and a complete exemption. Complete exemption is that your company is not part of the tax law or company that should pay tax. But this time around, you have to pay tax, but the rate at which you will pay is 0. So if the rate is 0, what happens? You will get your profit and multiply it by 0 rate, then you get 0 tax. Go and file and say you are not supposed to pay tax. For Guru in the house, what you want to hear is what is the difference between 0 rated and complete exemption. Complete exemption means that if there is a benefit for people within tax net, you will also not get it if you are completely exempted. But if you are not completely exempted but you are 0 rated, it means those taxes you pay when you were buying inputs into the company, you want to produce microphone, you bought plastic, they tax you there, no problem, because you are the one they are taxing, not that you are paying taxes to government. These taxes that you have paid, you can bring it and put it together and still claim refund if you are 0 rated. But if you are completely exempted, you will still pay that and pay for life because you are not part of the system. Now, because we know, government know that some of you are just pastor, imam, you lack integrity, or that you may want to play on the loopholes in law. They now put a caveat that you cannot claim that your business is having turnover less or equal to 100 million, but your net asset is more than 250 million. So we now say, okay, before you will be qualified, then your net asset cannot be more than 250 million. And it's true. If you have asset of 250 million, then it means your income should also romance that kind of level of amount of money. And that is the wisdom in it. And Peter adjustment have told us we now have graduated rates, which I will show you later. VAT harmonization, we continue to pay 7.5%, even when the national tax policy is saying reduce corporate tax rate, increase indirect taxes. We still do not want them to increase because the National Assembly do not allow it to do. And I've told you about tax ombuds and what you have. So value-added return rates still maintain the same thing, but in that same vein, if Dr. Wolabi go to ShopRite, A Small, and all those things that you normally buy and they will charge you consumption tax, which is VAT, they should not charge you from January 1 again. And that's why I'm saying this tax law, as of today, is better than what we used to have as of 31st December. And I've warned you, I am not working for government, I'm just reading. And I'm understanding what is enacted as law. The good aspect of it, we are talking about it now. It means you no longer pay taxes on staple food, basic food, things that you need, education material and the likes. So the list has been expanded. the list has now been expanded. So when you go to all those malls, when you use your ATM to pay, check the receipt and check that they do not charge you because they are not supposed to charge you. So we also have a lot of relief. Essential items like food, education, healthcare now have zero VAT. However, rent, public transportation, and renewable will also be exempted, provided they are providing significant relief for low-income earners. So we'll discuss that again. Okay, so I want you to see how personal income tax affects you, the way I talked the other time. Assume that the first column is numbering in terms of year 1, year 2. Sorry, in terms of rate of your salary from 1 to 10. We now have annual gross, which is still the same salary you are collecting from last year to this year. If you are within 840,000, you will have been paying 32,528 naira as tax as at December 31st. But now, if you calculate your tax very well, you shouldn't be paying anything. That's why I said this new tax law is better for you than, please get a good tax consultant to help you compute. And I said that unless Dr. Olabi is collecting from 18 million and above, you may not really have changes in your tax, something. That's what I've been able to project here. So you will see the implication of new tax and the old. Unless your money is far in the range of 18 to 30 million per annum, then you pay more. And please let them pay, because they're actually getting this money. We need this money from them so that the whole redistribution of income can happen in the country. I just told you about company income tax, and the explanation. What was in operation before is what you have on top, and what you have down there is what we are operating now. And I can confirm to you that it's better than what we used to have. We have the issue of development levy and fund allocation. This is for those of us that want to do research, or for those of you that want to take government by their words. You find succor in this. What we are saying is that the Nigerian tax has introduced 4% development levy on accessible profit of companies. This actually replaces what we have in pocket of all the law, and it is now being consolidated as 4%. Some people are now trying to add this 4% to corporate income tax of 30%. No, don't add it like that. Even when we were paying 30% those days, we were still paying 1% technology fee, 2% education tax fund, so 15%, so. If you add it together, it's more than 4. It was those piecemeal individual charges that they have consolidated to be 4% now. If you have allowed the old law, you'll be paying more than 15 or thereabout. So, and the analysis of how this money will be allocated has also been stated. And I've explained the issue of corporate tax changes for business. And the new thing I want to talk to you about is capital gain tax for companies. For those of you that, whether you like it or not, you have registered your company as limited liability company. This concerns you. Now, if Professor Lambert has a limited liability company and he has like 3, 4, 5 personal car, the company also have 7 or 10 cars. But cars are not stock in trade. Godwin, or you speak Nigerian English. Professor Iwebuzo's business is not a business of selling cars. If peradventure something happen, they need to dispose some of their cars. These are assets of the company. And chances are that when you bought it that time, you may have bought it 1,000 naira, but when you are selling it now, you now sell it 2,000 naira. You now gain certain amount of money. In the old law, you have to treat that and pay like 10% of the gain to government separately under another hat. But this time around, the innovation to this is that this gain from disposal of the asset will be treated as part of company income tax. Okay? So that's what the new law is saying. Digitalization has also been affected, and I want to try as much as possible within the next 3-4 minutes to round up. How will this tax law affect Nigeria? Businesses, household, and government. For household, economic review, because your wage, transfer subsidy, tax waiver on food that I just told you, if you buy pure water on the street, you don't pay tax. But if you buy it from ShopRite and more, you pay VAT of 7.5%. You have been paying, you don't know. Okay? But this time around, you are no longer paying, so you have more money. Lower tax burden, because if you find yourself within lower band of income, you are no longer paying the way you were paying before. Okay? Opportunity also come because you now have small business regime and their startup. Those of you doing remote job, your income will not be as high as 100 million, so you don't even have business in paying tax. I leave government for government. I'm not interested in them. But let's look at business. We now have reduced business risk because we have elimination of minimum tax on capital. Certainty of tax treatment is now there. Not that you'll be charged to tax in one area, you also be charged to tax in another area. Lower tax burden, because up to 100 million, you are not paying taxes. But when you pray that your company should be expanded, then you are also praying to pay more taxes. We also have competitive tax regime, whereby if you pay tax when you are buying some materials to be used in your company, you can claim that tax as refund, okay, or credit or relief. And economic development incentive will always be there. If you perform what we call research and development, you will also be able to charge to tax. So let me quickly show you comparative tax rates across 3 or 4 countries, including Nigeria, so that when you are challenging government, you challenge from the point of authority. And again, before you come for me, I can preempt you. We say, but Nigeria is not like them. Go to those countries. They also have their own problems. I've been there. Any country I mentioned here, I've been there. In Nigeria, our tax rate is 7.5 with VAT. Kenya, that we all run to go and do training for people, is 16%. Ghana is 15%. Ghana, like my Yoruba people will say, 15%. South Africa, that you cherish, yes, you will tell me that, but their country, no, la lie. Go to Joburg market, it's just like OJ market and Oshodi market. Okay? So their VAT there is 15%. Tax on airtime, Nigeria is not charging, but Kenya is collecting 15%, and Ghana is charging 5%. South Africa is also not collecting. When we look at the top band of our personal income tax rate, the highest band in Nigerian personal income tax rate is 25. Kenya is charging 35% on their salaries. Ghana, 35. South Africa, 45. If you go there, you will pay 45 if you are in that band. Okay? When you talk about small company, Nigeria, you pay 0%. Kenya will pay up to 3%, but on turnover. Now, look at the difference between the two. Nigeria will say 0% on your profit. On your profit means that you already have turnover. You deduct all your mamagbo, babagbo expenses. You get profit. It is on the profit that you apply tax rate in Nigeria. But Kenya is saying all the gross income that come, 3%. And I can confirm to you that 3% of turnover is bigger than 10% of profit. Okay? Ghana is also using 3% on turnover. South Africa is also like Nigeria on that one. Now, when we talk about large company, those that are paying the highest, let's just assume 30%. Because up till December 31st, you are still paying 25. If you are going to file returns this year, you are going to file return based on 25 if you are a small company. But, sorry, if you are a medium company, if you are even a small, you pay 0. Kenya is collecting 30 from large company. Ghana is collecting 25. And then South Africa is collecting 27. I'm just showing you this so that you don't allow the 20% of Nigerians that are doing well to recruit you to carry placard to destroy public things on behalf of them, and it's none of your business. Okay? So now, revenue mobilization and fiscal stability is what we discuss on radio, television all the time. You may not be interested, but just let me know that we now have, in terms of macroeconomic stability, we have diversified revenue stream, and it can help us fill in the shock that we could have when there's a problem in what my other people will call oil money. When the oil money collapse, this issue of fiscal responsibility and something will help us when it comes to infrastructural investment, notwithstanding the fact that government is still not able to perform when it comes to capital budget up to 10% as at now. It's still better because they now have money to enhance the capability. Let's go to implication for personal sustainability. Personal sustainability, which concern our activities. Household financial stability will now be okay because family must structure their budget. Please, based on what we have, it is the mind of this association, this institute, that you consolidate yourself, seek help, write to the president. He will disseminate your case to relevant council member on how to help you. I'm not sure if you come under this institute, you'll be charged the way you'll be charged, even if there are going to be any charges at all. You can come, they can help you repackage your business, and then even your personal finance can be affected. Wealth preservation, you must have strategic asset allocation. Go through retirement planning and carefully select assets that can succeed you, that can be there for you, that can take care of your children, and then be ethically okay when it comes to citizenship. Let's look at organization sustainability. Sector specific. Financial services, please, you have complex regulatory compliance. If you are a member of our institute, go and check what you have to do concerning withholding tax. What about VAT for manufacturing? Oil and gas, go and check all the levies. Digital economy, if you are the type that do business online like Adeyeye and Co., you should now calm down and understand the provisions of law so that you will not misbehave, and then you will be on the other side of the law. And then if you are on the other side of the law, the penalty and the kind of restraint that can come may also affect you. I think we should conclude that the ugly part of this is that we don't want to have any reason to pay tax, whether it is reduced or is increasing. The ugly part is not a bad thing, it's just the ugly part of it is that as of today, since over 7 months that this law has been on top, 1% of this audience have not opened one page of this law. But we are quick to just go online and say, bastard, stupid, the only thing is tax. How many of these tax have you paid? In fact, one of the ugly parts is that some of you still believe that Tinubu is here to just tax. Since he has joined, he has created so many taxes, he has increased taxes, and I'm challenging you, and I put a price of 100,000. Within the time that Tinubu joined, up to 31st December 2025, if you can list at least 5 taxes that Tinubu has introduced that affects you, that he has increased tax law, he introduced new one that affects you. If you can list 5, I'll give you 100K. But the meaning is that it's because of your inability to calm down, seek help from professionals, your institute. That's why you are allowing somebody that has been paid to blackmail the tax law. Once they pass it to your group WhatsApp, you also fire it. You don't really want to behave that you are literate. Please, when they send this kind of thing, don't be part of people that will forward it. Read it. If you cannot understand, call professional beside you before, because he has not introduced any new taxes to us. And if there is any increments in any tax, I am very sure it is not for you, because even the company income tax has been 30% since the days of democracy, 1999, that I know. But the successful government after that has been reducing it up to now. Okay? So I want to say thank you for listening to me, because recommendation is what we all do together during the question and answer. I've taken a lot of our time, but it's good for us to have this today. Thank you. Over to you, moderator.
Thank you very much, Professor Oyedokun. Can we please appreciate Professor Oyedokun with our emojis? Please use your emojis, those online, to appreciate him. Let's react. Thank you. Thank you very much. Excellent. Thank you very much. Thank you, Professor Oyedokun, for that presentation. We truly appreciate it. I must say that it's good that you started off by saying you are not hired by the government, or you don't work for the government, because after you have explained all of these things, it now looks to me like all the things you're saying shows that these tax laws are actually for our benefit rather than against us. I've been able to note from your presentation, for example, that employees who are liable to pay as you earn, the pay as you earn tax, are actually better off now than they were on the previous regime. Also, businesses are better off now on the new regime. I also appreciate the visual analysis you were able to show us, comparing your income on the old regime to your income on the new regime. That really made a lot of sense. It made it really resonate with us for us to understand exactly what you were trying to say. Also showing us the visual representation of the taxes, the rate of taxes in Nigeria and 3 other countries. That was also fantastic, because it helped us to see that what we think is so bad is not really as bad. It's most of the time we follow the frenzy that is built up on social media, on radio, and on TV. And for this, we truly, truly appreciate the Institute for putting together this webinar, because we're now better informed. We're now better informed. We understand what is going on. We're not panicking anymore, because we know now that the government is not here to take away all our money. Sometimes some of us can actually be better off than how we were before. Right, during the presentation, we got a few questions. If you still have questions from the presentation, you are welcome to put your questions in the chat box. The first question that I have here is from Nuruddin Adedoko, who says, does the 10% withholding tax on rent apply to individuals? And if yes, what is the penalty for not deducting and remitting to state internal revenue?
Okay, so the question is not clear, but if what you mean is that if you do business with some people, do they withhold tax? The answer is yes. However, the reform we have in this 4th tax law are not part of what you are talking about. There's a withholding tax regulation, and I will send it to the president, who will send it to all participants. So you look at where you belong and you know what to pay. And let me tell you another thing now. If I'm working here now and I take lecturing maybe presentation in another place, and they gave me 200,000 for 1 hour, the withholding tax of 10% will be deducted as my final tax for that purpose. It's not the same thing as my payee. So that's what you are trying to say. Every tax law has its own penalty. Please, you need to just lay your hand on that withholding tax regulation. God forbid that we know everything. Next question.
All right, another question from Ogoba Ayo Andrew says, insurance agents are taxed. What is, I'm sorry, I'm missing a bit of that question. What other taxes are they expected to pay?
Okay.
And how should they go about achieving this?
Okay, so if you say you are an insurance agent, first you need to get yourself cleared about if you are an insurance agent. If I'm an insurance agent now, but I'm working in Lee City University, I'm working here, so I'll pay my payee. So when I pay my payee, if I'm not doing any other business in terms of agent, they will deduct withholding tax because you are not their staff over there, which is 10%. So other taxes you will do is that if you go to section 24, subsection F of Nigerian Constitution, you declare your income. So you pay taxes on all those income, including no matter where you get that income from. Once it is income, you pay taxes. So it is not depending the nature of that income that will put you under a particular tax type. Okay? if you are doing lecturing, Jello see me, and they pay you lecture fee, you pay your withholding tax on that. And if it is that the organization is not the one, the likes that does that, your income must be added to your personal income computation per year, and you pay it. Okay, that's what you do as insurance agents.
All right, thank you. We have another question here from Sophia Adeyeye. According to the new tax law in Nigeria, what are the required steps and documentation that workers must follow to apply for and obtain a tax clearance certificate TCC from the Federal Inland Revenue Service or relevant state internal revenue service?
Okay, good. So there are 3 questions in one. What is tax clearance? Tax clearance is that statement that shows that you have your tax affair for a particular fiscal year, and counting back to the last 2 years are actually in order. So on a tax clearance, you have 3 fiscal years. If you want a tax clearance now, this 2026, the tax clearance will be clearing you for 2025, 2024, 2023. So it means you are cleared that your tax affair is good to the extent of their capacity. Now, if you want tax clearance for individual, if Adeyeye work with Adeyeye and Co company, you have been charged payee. What you will do is, if that company is in Delta State, write a letter to the executive chairman of Delta State Internal Revenue Service, application for tax clearance. I hereby apply for tax clearance, so. I am a staff of so place, and my salary is paid to me, and the tax is deducted. So find attached some document to buttress your point, whatever the English you want to spend. Number 1, do a schedule of your monthly salary. Have a column for number of months, month 1, month 2, up to 12 calendar months for first year, which is 2023. For every year you are writing, you must be doing 3 years. Now, what is your gross salary? Number next, how much did you pay a tax according to your pay slip? Okay, you do that, and then you total it for a year. Do for the 3 years and attach it. Okay, if your organization actually remit your tax to that state tax office, when your application get there, they are supposed to treat it within 7 working days. And they will call you to come and pick your. They may not give you that tax clearance if they notice that Adeyeye is using gold, using Prajero like 3 or 4, but she's claiming that she's collecting 150,000 from Delta State University. That shows that your lifestyle cannot support, your salary cannot support your lifestyle. Then you are getting money somewhere else. If it is Mrs. Adeyeye that is giving you, or Mr. Adeyeye that is giving you, you need to disclose. Then you will now be made to go through additional assessment, new assessment, revised assessment, or they give you what they call best of judgment, that before you can buy new Prajero for 27 billion, then you must have 100% of that money. They will gross it up and say, if you have 27 divided by that percentage, they will get the original amount. They will not place, if you have 27 trillion, then the tax you should have paid on that money is this. They will ask you to go and pay. Then you will now go and tell government, this is how I get money. So the onus will now be on you to say, no, I did not receive this amount of money. Okay? So if you don't have such problem, you won't have any issue. And I want to advise my colleagues, which I do every year. If you know that apart from your salary, you get money legitimately, just go to state or something every year, pay a kind of self-assessment and say, oh, apart from my salary, when the Institute of Personality Development invites me, they give me 200,000 per hour if I deliver lecture. And I deliver lecture once in a month. So 200,000 times 12 is that amount, Abi. This is it. So how much will I paid on that? So they will just ask you to pay exact amount you should pay. Then you have declared. So nobody threatening you anywhere or anytime again. For company, I've treated the tax clearance for individual. Let's not teach for company. If it's a company, you will write as a company to the federal one now, which is Nigerian Revenue Service, requesting for your tax clearance. If your company is not a new company, good. If your company is more than 3 years in existence, then your tax clearance must cover the last 3 years. It means you must have filed your return for those 3 years. And before you file your returns, it means you have accountant that is preparing your financial statement. And if you have accountant preparing your financial statement, you also have auditor that have audited your account. Then you file it. If they don't have problem, they will give you tax clearance. But if they check your account and they notice that you have board in your skeleton and skeleton in your board, then they will call you to come and explain. And that's just how it is. I think I've answered that question.
Thank you very much. We have one more question. Under the new tax law in Nigeria, how does the government verify or assess business costs that are claimed as non-taxable expenses? Does the tax authority accept any amount reported by the business owner, or are there specific procedures and criteria used to confirm the validity and reasonableness of such costs?
The question must come from academician, because they are the one that will write thesis when they are.
It's from Sophia Adeyeye.
They are the one that will write thesis when they are asking question. And the truth of the matter is that, honestly, we are not all idiots in Nigeria. Just like your students will bring thesis that is copied and pasted somewhere, you will know it within 5 minutes of flipping through. So if you also mumbo jumbo financial statement to government, they also know. They will see it, because you need 1,000 lies to cover one lie. And don't forget, if I am a teacher and I'm talking like this on financial statement and tax, how much more those that are sitting on the same job every day? So once your financial statement is getting to them, we have some tests that they will perform and they will know that it's not correct. Again, by the time you present your financial statement, they will pick individual items on your financial statement and check whether this
If you are still online, we're going to try and take a screenshot of all participants. Please stay online and put your cameras on, please. Stay online and put your cameras on so we can get a group picture of everybody on Zoom. We had about 60 participants altogether. But for those of us who are still here, please put your cameras on so that we can get a group picture. Some people's cameras are looking at the ceiling. Adjust your camera so that we can see your face. Thank you to those who are ready. Thank you so much. Ifeoluwa, your camera is sideways. Can you turn it the right way up? Folashade Awe Adesanya Israel, we can't see you. We can see the room that you're in, but we can't see you properly. All right, so we're going to take the picture now. Smile if you can. All right, hold on please, don't go yet. Hold on please. I want to take another one of the next page. Please hold on. All right, let's take the next page. All right, smile. We're taking another picture. All right, everybody, thank you very much. Thank you very much. Thank you for joining. Thank you for spending the time with us. I'm sure you appreciate the time you spent with us this afternoon. Enjoy the rest of your day.